Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
It's unfair to David Seif. He's the chief economist for all developed markets at Nomura, and we're supposed to go, what's nominal GDP look like? What is the first derivative of consumption? No, we got to talk to him about, he was at Harvard with Governor Myron, and today a blistering article by the wonderful Tom Orlik at Bloomberg about R-Start. Professor Seif, let's start with what is R-Start?
Well, good morning. So R-Start is the real rate, so not counting inflation, that would be neither expansionary or contractionary to the economy.
How many plugins are in your calculation of R-Start? How many guesses?
How many guesses? There are a lot of things that would go into it, but there are a couple of things that are by far the most important.
Please.
Population growth being one of them, and rates of national savings being another very important aspect of it.
There's a huge disagreement on this. Discuss how you approach it at Nomura. Is our R-Start coming down back to what we remember pre-COVID, or do we establish a new R-Start at a higher interest rate?
Well, so I think the biggest thing when it comes to R-Star has really been a 40 to 45-year trend, which has been a slow and steady decline.
The great moderation.
Yes, and that's more than anything else, I would say, due to slowing population growth. It's been happening around the world, and the places where the neutral rate is the lowest and has been for decades are places like Japan, where the population growth has been the weakest. So that is a very slow-moving force, but one that probably over the course of decades is the single most important one out there. And so I think that what happened after Lehman in the Great Recession was that we, because of the overhang from that, R-Star really fell below what was the declining trend. And then COVID happened, and it was, for various reasons, the opposite. It jumped up to above what was its longer run trend. And now I think we are certainly heading back towards that longer run trend. Now, what Governor Myron has proposed certainly is controversial in terms of some of the inputs he's put in and therefore the conclusions he's come out with. But I think that it's probably more people than not would agree that it has fallen or is falling in the post-COVID era and may continue to fall further.
Boy, did he hedge that? He was like a lawyer.
He knows what he's doing.
Busted his job.
So, David, the Fed has cut 25 basis points. How do you think they're going to proceed? What do you think the cadence is going to be of their kind of rate moves going forward?
Yeah, we have no reason to doubt the dot plot for the rest of the Powell's time in office. So, especially for the rest of this year. So we think that they'll cut in October. And frankly, how could they not, given that it looks like they're not going to necessarily have all the data they would? December, we also think they will cut again. So it's not necessarily something we think is completely necessary to do, but they've put it out there that that's what they're going to do, despite the fact that they upgraded economic projections. And so hard to see them being knocked off of that, especially with probably less data than normal, or maybe no data coming out. And then we expect they'll cut once more under Powell in March. Then we think that post-Powell, there are probably another couple cuts coming. And that's really more of a matter of the next Fed chair, whoever it is probably going to be much more dovish than Powell and at least receive some deference from the rest of the committee.
All right. Looks like our government may shut down at midnight tonight. As an economist, do you care?
Well, we certainly care for doing our jobs. I mean, this is where we this is what we do is we analyze government data. So it's going to be a little bit of a famine at first, and then feast as the data eventually come out later, and there's catch up. But in terms of the real economy, probably not so much. There will probably be a small hit to GDP from the lack of work going on in Q3 or Q4, I guess, because we're starting Q4 tomorrow. Yep. But then we would expect there to be almost one-for-one catch-up growth once the government reopens, so Q1, Q2 of next year. I think that it's particularly important in that the lack of data coming out right as the Fed has tacked dovishly does make it, as I said, more difficult for them to deviate from that, because what would be the justification for doing so? So it may lead to monetary policy outcomes that once we then get the data, we're like, oh, well, maybe they shouldn't have done that. But for the real economy as a whole, it's hard to see this being such a huge deal.
It seems like the consumer out there is in pretty solid shape here. How do you think about the U.S. consumer and 70% of this economy?
Yeah, we see the consumer as pretty strong. And we had an upside surprise a couple weeks ago to retail sales. And generally speaking, we've seen over a year of strength in retail sales. And that really, we think, reflects the fact that although there aren't a lot of hires going on, there really are very, very low levels of layoffs going on in the economy. So the vibe may be one that the economy isn't that great, although even that is starting to change. But the hard data are pretty clear.
But isn't it K-shaped, where the vibe is half the nation's flat on their backs, farmers screaming for aid from the president, soybeans, Brazil, all that. We know the drill. And the other people are packed in restaurants Paul goes to that Lisa and I can't afford.
It's not necessarily an unfair characterization. The key thing, though, is that as long as the people who are currently spending money continue to feel good, they're going to continue to spend money. If people who are new entrants into the labor market are having more trouble than normal finding a job, and
right.
there is some of that, that's a real social issue, but it's not necessarily going to hurt the economic data over the short run, and that's what we're seeing.
David Seif with us with Nomura. We continue, the chief economist for developed markets at Nomura. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Monica Guerra joins us right now, U.S. Policy, Morgan Stanley Wealth Management. What are the ramifications to someone in Illinois or Arizona of a government shutdown? I get Washington. What's it mean for the rest of the nation?
It means jobs like, post office, for example.
You don't get your mail delivered?
It can get delayed, right? It depends on how long this goes. They start to shut down parts of the, non-essential workers. If you're thinking about your local offices, et cetera, that could have an impact across different, states.
Paul, 12 years ago, 16-day shutdown.
Yep.
The jobs day was October 4th. It came out October 22nd.
So we get it, just delayed, I guess. Yeah. I mean, so is there, what does that mean for markets? What are you telling your clients about a government shutdown? I kind of feel like we kind of do this somewhat frequently. It's not that big a deal. What are you telling your clients?
I mean, on average, you get markets, the S&P 500 rallying 4.4% during times of government shutdown, regardless of length.
So markets rally during a shutdown.
Rally through the shutdown. So essentially, they see through it.
Okay.
They stay exuberant. But where you see any sort of pullback or correction, it's around those industries and sectors that have heavy reliance on contracts, right?
Yep.
Like defense, like healthcare in certain instances. And we think, especially on defense, right, that could be a nice buy opportunity.
So what are we doing here as it relates to, do you care who gets blamed for this? Do we care if it's the Democrats or the Republicans, the Trump administration? Do we care about that stuff? Or we just want the market we want the government to kind of do what it has to do and then maybe get open at some point?
I mean, do we care? I would say writ large, no. The blame piece is not as critical, right? It's about what actually happens through the cycle, how long it goes. Now, what's important for us politically, though, is to understand those dynamics, right? That the Democrats want that ACA subsidy extension. The GOP is, against it. But then there's this additional element that could be thrown in where the White House could come in trying to use this as a catalyst for impoundments or apportionment control, meaning, right, that they're going to withhold potential funding for certain non-ideologically aligned, programs and agency activity.
Let's talk about the job. We're going to have Nathan Dean again, who's expert on this. But Monica, do you assume at Morgan Stanley the president will handle this differently than any other president has ever handled a shutdown? That's the heart of the matter, right?
Right. I mean, that's where the impoundment piece comes into play, right? We saw him do that with Ukraine funding, so there is a precedent. And so while they're not going to get these mass layoffs, right, we've seen that. That's not going to happen. You could get this as an excuse or a catalyst to then come in and say, well, we want to go harder on these clean energy components, right, at the EPA. We're going to stop funding for that. And if you get that dynamic, that's the sort of stick off-ramp that gets the Democrats to the table. The carrot off-ramp is, do you get those rural state GOP members a loud enough voice to then come together with Democrats to get those ACA subsidy extensions?
I look at President Trump, I think he's hitting it out of the ballpark every day, it seems like. Yet people tell me his approval ratings aren't very good. How do you guys square that?
I think you have to take it. You have to take these two things separately. Markets are separate than social issues and things that might be potentially driving fears with voters. And those two things are very different.
There's percolating in the zeitgeist that the fiscal bill that the president spearheaded through will not bring in more taxes. There's a huge assumption tax revenue will go up. What does Morgan Stanley say?
In our view, we think that if you're looking at earnings, if you're looking at the markets, tax revenues are likely to increase, right, when we're in this next pull. That doesn't mean it's going to be for the long run, right? And so we think short term, we could get some nice tax receipts here towards the end of the year. But then into 2025, we still do expect a slowdown. And that's because you're looking at positive GDP numbers, right? Nominal 6.8%. Where do you go from there?
I got 20 seconds. Nobody cares. All we care about is TSA. If there's a government shutdown, what happens to TSA?
TSA, I believe, is going to be deemed essential. So.
Thank you.
She's just rock solid.
You don't have to worry about that with the Gulf Stream, just going out the.
No, that's true. I do. No, I'm not going to. I'm going to Middletown, farther out.
Okay, yeah, I know.
Farther out. It's too congested.
Yep.
Monica Guerra, thank you so much. Executive Director, Head of U.S. Policy at Morgan Stanley Wealth Management. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We have in studio, we've spent weeks trying to get her in here. Suki Cooper joins us. What's it like working with Stephen Englander at Standard Charter? What
Amazing.
A privilege.
I'm inspired every day. It's fantastic.
Inspire us with a broader commodity trend. Rishi Sharma would say, we're waiting for a super commodity trend. Is it upon us, Suki Cooper?
We still see further highs for the gold market. We've seen a number of factors driving the market, and it's changed. At the start of this year, we saw a shift away from central bank flows, driving the market to ETF factors becoming much more important. And now we've seen the correlation between real yields and gold coming back. The macro environment is increasingly important. So ranging from concerns around the US potential shutdown, government shutdown, to the scope for Fed to cut rates further, ranging to tariff concerns as well. All of these factors are playing into safe haven demand for gold.
Is there a valuation call ever for gold and other precious metals, or is it just people are buying them, they're buying them? I just never know how to value gold or get a sense of when it's expensive.
Gold, I think you need to view it as a commodity and a currency. So when investor appetite is lacking, that's when the jewelry market, the physical market becomes important. So like the 1990s, that's when the jewelry market set the floor for gold. And that's what was happening over the last couple of years. It was really that central bank demand that was not just setting the floor, but driving it higher. But now we're seeing it behave as a currency. And that's when these external factors like the dollar become much more important.
Bill Winters would say to me, hey, stupid, ask her about the Pacific Rim. Indonesia, Freeport, they had a terrible accident there. I did a lot with FCX years ago. Where is Suki Cooper on the given supply of stuff in the commodity space? Are we running out of iron ore? Are we running out of gold as new supply? And frankly, the softs as well.
When we look at the gold markets, the supply has been very easily absorbed. And yes, this Grasberg force majeure has meant that we've seen supply coming offline. We're going to see quite a sharp drop.
Force majeure is French. If you go to the University of Birmingham, I have no idea what it means. Continue.
But next year, they're looking for a decline in output around about 35%. So that means around about 17 tons will be offline. And yes, it tightens the market. But these are the sort of flows we can see in the ETFs on a daily basis. So the market can absorb such a loss, but it just tightens our underlying balance.
I mean, we all talk about gold, rightfully so, up 45% year to date, but spot silver, and that's up like 60% this year. What's driving that?
Silver to me is a fascinating market given its vast array of end usages. But until this year, silver had been lacking gold's outperformance. And that was partially because central bank demand was driving gold, and silver didn't have that kicker, even though it was deeply undersupplied for the past few years. But this year, because we've seen gold now pivoting to following those macro factors, silver is now starting to ride on its coattails and relatively is underinvested. So those ETF flows in silver are picking up at an even faster pace and up almost 3,000 tons.
Tell us about the things off the vision. I mean, with Standard Chartered Bank to look to Australia in iron ore. Is the dynamic of iron ore into Shanghai iron ore, is it normal, the flows to China and all?
Iron ore is not a market that I look at in detail, so I can't share.
It's surveillance, you can make it up.
But looking at the gold flows into China, that's something that we can monitor. And we see that China's appetite for gold, appetite for commodities remains strong. Whether we're looking at the copper market, silver market,
I was going to say copper. And people used to, like the copper inventories, do they have like a strategic copper reserve? Do they have like 7 Fort Knoxes of copper out there?
There's some commodities where we're starting to see a build. We haven't got visible data on how much strategic stock there might be, but markets like platinum, we've seen imports far outpacing consumption.
Suki Cooper with us. She is with Standard Chartered Bank and just definitive on commodities. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.
To the newspapers, Lisa, what do you have?
Okay, so yesterday we talked about the NFL announcing Bad Bunny, the Super Bowl halftime performer, okay? Now there's a controversy. The stories are starting to come out. So he's basically, Grammy award-winning artist, fresh off his residency in Puerto Rico, and that's kind of what's sparking the backlash a little bit. He decided on the residency instead of performing in the U.S. because he said he was worried about ICE agents using it as an opportunity to scoop up migrants. So that's sparking some online protests from, MAGA influencers, conservative social media accounts. And then not only that, but the Wall Street Journal actually has an article too, how Swifties are upset because they thought that she would be performing at the Super Bowl. Remember, that was the whole thing after they got engaged and all the Swifties were like, yes, she's going to be in the halftime, performing at the Super Bowl. It's not going to happen. But it's not the first time. Sometimes there's controversy behind some of the performers that they pick, like Kendrick Lamar, Beyonce. There was some controversy. Shakira, J-Lo's halftime performances. There was some controversy.
Shakira killed it.
I know.
Shakira did not mail it in.
Shakira and J-Lo killed it. They did.
All right.
But you can't please everyone, I guess. But those are kind of the backlash that's starting to come in. But he's still set. I mean, his residency was phenomenal. Loved it. Watch it on Amazon.
A little bias there, like a home bias.
Oh, I know.
Of course.
Exactly.
Puerto Rico. There
Next.
you go. Okay. This is on the back of yesterday's story from Bloomberg News. The Financial Times has a little bit more on the record number of mega deals in the third quarter.
Yes.
So we kind of talked about this yesterday when you had that $55 billion leverage buyout of Electronic Arts. So they crunched the numbers they put together from London Stock Exchange Group. Global mergers, acquisitions activity passed $1 trillion in the third quarter. 14 deals valued in excess of $10 billion announced globally. And it's kind of like this turnaround from, uncertainty over tariffs. So things are starting to change. People starting to do some deals. The biggest one, remember Union Pacific, that $85 billion takeover of Norfolk Southern. But the big breakups too, like remember Kraft Heinz, Keurig Dr. Pepper.
Yep.
So it's kind of all this background.
And this is what people kind of thought when President Trump was elected, that maybe there'd be more deal activity, lower, less regulatory scrutiny, more deals happening. So maybe this is what we're getting.
Yeah, because I remember they were also, it put a pause on IPOs for a bit, with tariffs and all that uncertainty. But things are picking up.
We're back, baby.
Yes, I know you love that.
Yes.
Okay, this is some advice from Bill Nye the Science Guy. Okay, who doesn't love Bill Nye the Science Guy? Okay, how to keep your brain healthy. Okay, here's what you have to do because this is what He does.
Okay.
He's 69 years old. He talked about it. Crossword puzzles. There you
do
go.
that every day.
You do. You see. You do your.
day.
No. What's the word? What's the word?
I do it all. I
This
do the
is
whole
a
New
debate
York
at
Times
home.
thing.
Crossword puzzles like helpful.
I've been doing it since I was like 10 years old.
Are you good? I've
Every
never
day.
completed. I'm
Every day.
useless.
Every day. New
Do you
York
get
Times.
better at it?
Yes, you do.
Okay.
See,
Yeah.
crossword. My mom
So I
loves the
ripped right through it
Sudoku.
until Friday. Then I hit a wall because Friday's tough.
And what else does Mr. Nice say?
Okay, so he also does like little things to keep his brain, like designing, making model trains, physical activity. Do you know he bikes 3 times a week and he swing dances? He says that is a big thing that keeps him kind of active.
All right.
And learning new things. That's all about keeping that, the brain in check. But he is busy. Bill Nye the Science Guy. Gotta love him.
I love that guy.
Very good. Lisa Mateo, thank you so much. It's the newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.